I think this question is going to be at this particular how Mrs. Oyi and Mr. Shevifol. So, on about the stages of funds, the pre-seed, the Series A, B, I want you to just try and elaborate about it. And it's going to go around, but let me just start with Mr. Shebu.
Ladies first.
So before seed, we really mostly talk about angel funding. So this is when you're very early stage, you just need some money to help keep you sustained, to pay your bills, etc. And typically you'll get angel funding from your friends and family, or maybe some other people close to you who can provide you that funding. What I see for a lot of Nigerian startups is that angel funding is typically in the form of a safe, which I explained in the last panel, which is around you getting some form of debt, and that means you don't need to do your valuation now, because when you're that early stage, you don't really know what your valuation is. And then you agree that it will convert into equity at a future date. So that's angel, and that becomes before seed. Seed is then the stage that the companies that we invest in typically go on to raise after, and that's maybe $1 million or $2 million as their first significant fundraising round. And then when you get to Series A, B, C, it's just bigger. Yeah.
All right, just like she said, these are different stages of fundraising process. The pre-seed, the seed. These are basically pre-product market fit, right? They haven't really figured out their product market fit, but they're working towards it. Speaking of the ticket sizes, right? These days, what we're seeing is that even with regards to ticket sizes, there is no one size fits all. You could see a seed round of $5 million, and you're like, is this a seed round? You can see a Series A of, so the boundaries keep on shifting. I think the most important thing at the core is how innovative is the business, what is the total addressable market, how big is the market, and that's what now determines from an investor's perspective and point of view what ticket sizes that are going to be given, right? In some cases, you see some techs, maybe someone that has worked at Tesla, right? The same guy has worked at Starlink. The same guy has worked at basically the Ivy Leagues of tech companies, and they just put that on their deck. We have worked at this, and they jump to this is how much we're looking for. And you'll be surprised, they will raise remarkably bigger than what should be that category of the round. So basically that's it.
Maybe I can just add a few things as well. When we think about the different, letters, so from an investor's perspective, what are you looking for in these different stages? So I think at pre-seed, it's really an idea. So you're looking at market, yes, you're looking at traction, you're looking at team. But what actually drives your investment decision at pre-seed is the founder. Because it's really just an idea at that stage. So you're looking at the passion from the founder, their ability to execute, their skin in the game, and their knowledge and competence. That's really it, because it's still an idea. At seed, you're still looking at those things, but they should be some sort of minimum viable product. It might have not yet been commercialized or monetized, but at seed, there is a minimum viable product with a roadmap to growth. So what you're looking for at seed is a little bit different to what you're looking for at pre-seed. And then at Series A, you want to be backing a team, you want to be backing a product that is commercialized, monetized, but it's now ready for scale and ready for growth. So what investors look for at each of those stages is also slightly different. So as a founder, when you're thinking about putting together your pre-seed deck, putting together your seed deck, putting together your Series A deck, you need to know those different nuances, because it would help you as you talk to investors as well. I just wanted to add that.